Perfect. Hello. Okay. Well, we'll be discussing a practical solution for mobilizing private capital in climate finance. So with me today, and I'm going to start on this side of the panel, Gabriela Acevedo, the Chief Strategy Officer of IDB Invest, John Larea, CEO of Convergence Blended Finance, Laurence Messez, Chief Sustainability Officer at BNP Paribas, and Debbie Palmer. And remind me your title, Debbie, you're Director of Climate Finance or Energy and FCDO in the UK government. So thanks everyone for joining us today. And let me start with you, Laurence, right away. And we're going to do that a little bit different way. Tell us a little bit about what does an ideal climate finance investment look like in a developing country where none of us around the table would be putting money except the private capital?
Okay, I think that's on. Okay, thank you. So thank you for the question, Mathieu. I'm afraid the ideal situation you're describing just doesn't exist, but let's dream. For us, as a private global bank, the ideal setup will start with a solid regulatory framework, of course, and clear rules for public-private partnerships and other private sector investment in the country. Second, what's of the utmost importance for us as a private investors is political stability. Then the ethics environment should be also very clearly defined, especially when the underlying cash flow in the local currency. And above all, projects would need to really make sense from an economic point of view for the country, such as, for example, providing affordable electricity and water to the people. So that would be the perfect setup. And in this situation, we would be able to provide our expertise on the product side, such as green bonds, KPIs, labels, of course, advising our clients on the structuring of its financing. And also, which is very important, is we are able to test the appetite and the expectations of the market, and finally, to originate and distribute.
Thank you, Laurence. I actually remember the originate to distribute from my days at BNP Paribas. And I think you're making a good point, right? It's not only the characteristics of the transaction, but it's also what's the local ecosystem in the country, and that is also part of the equation. John, let me turn to you now. So that's the ideal setting we just heard from Laurence. Now tell us, where are we and how close we are or how far we are from that ideal setting?
Right. So where we work at Convergence is in that space where transactions should be commercial and aren't quite able to be commercial or on fully commercial terms, either because of country risk or because the transaction is a first of a kind or because people's perceptions are actually higher than the actual risk. So we're operating in that margin where BNP Paribas and their kind should be able to work, but they're facing a difficulty. And what we track is that world of blended finance where you really need to have a layer of concessional money inserted somewhere into either the structure or the preparation of the structure to get it to work. So what we're seeing there is maybe indicative of what isn't working commercially yet. We just published our 2023 State of Blended Finance report. And our findings were that if you look at climate blended finance, which is the subject, of course, of COP, is climate finance, about half of the transactions are happening in Africa, and the next biggest region is actually Latin America. So in the climate space, there's a heavy use of blending to get transactions done, even in Latin America, which oftentimes is a favored destination for investment. So we aren't there yet. We aren't where BNP Paribas should be able to be, which is to go about doing its business without support. But there are a lot of interesting transactions that we are seeing that are blended that hopefully are a stepping stone to get us there.
Thanks, Ron. Gabrielle, now to you. And again, you know, we're going to get to transactions eventually, but I'd like us to focus a little bit on what's before the transaction, right? And how do we eventually get into a bankable transactions, and what kind of work is it that we can do, especially as an MDB, to make that transaction more bankable?
Thanks. Hello. Thanks, Matthew. I think the relationship amongst everything that we're talking here is very important for that. No, first on the aspect of de-risking and making projects more attractive to the private sector, right? To crowd in the private sector. In that sense, one aspect that we're looking at IDB Invest that I think it's very important when we talk about upstream work and start early, it's not only the aspect of de-risking projects and making them more attractive, which is very important, but going beyond that and basically help to formulate the demands that we all are looking for in terms of our development objectives. So really early in the process, working with clients and markets to develop that demand. Blended finance is essential in this context, right? Especially to cover the cost of the initial technical assistance, upstream work, which does not appear to be attractive to private investors, or it is too risky. So in that sense, it's fundamental. Two other aspects that I would like to raise with respect to your question. One, that is particularly important, or both in our region LAC. One is the sustainability and long-term vision, especially with respect to environmental issues and social acceptance, which are key aspects in our region. In Latin America, being able to provide technical assistance, being able to work upstream to prepare projects and clients and markets in a broader sense, to deal with those challenges and to a certain extent transform those challenges into opportunities is key. And along the same lines, working upstream, working with technical assistance, working with blended finance on aspects related to policy and regulatory frameworks. In Latin America, in particular, the vision or the participation of governments is very important to lever projects with the private sector. And to the extent that we can work on policies and regulatory frameworks that provide comfort in terms of legal stability, regulatory stability, that makes those projects a lot more attractive. So in summary, a lot of interrelationships between upstream, blended finance, and technical assistance, and they all work towards the same goal of developing better projects and bringing in investors.
Thanks, Gabriel. And since we are going great in terms of time, congratulations, by the way, does anyone want to follow up on Gabriel's point? And I'm looking at you, John, because there were some discussions on bankability, and I recall we've had that discussion already a couple of times. There is money to de-risk transaction once they exist, but there isn't that much money available beforehand. And I know Convergence has been doing a lot of work in that domain, so perhaps you can tell us a little bit about that. And then Debbie, let's hold on Gabriel's point on policy and regulation, because I want to ask you a question on that.
Sure. Most of the time, Convergence is not in transactions. We are guiding the field, we're informing the field, but we do some acceleration of transactions. And we take grant money that's entrusted to us, and we, on a competitive basis, will select early stage concepts, financial structure concepts that we think could be bankable but can't get to the starting line because the team working on the idea doesn't have the budget. So we have direct experience working in that place. There is not nearly enough money out there on concessional or grant terms to help along a lot of transactions that could eventually be bankable. So I would make a plea for anybody who's in the granting business or soft loans business or any other kind of catalytic capital business to think really hard about engaging in that pre-investment moment. I can give you a couple examples, if it's helpful, of times where we have picked ideas in Latin America to work on. One of them is already out and running in the markets. This was the green FIDIC that was brought to us by Albion Capital. The idea there was, and this is using an existing regulation, Albion Capital observed that there is a structure in Brazil, I don't speak Portuguese, but FDIC, green FIDIC. The FIDIC is a structure that anybody in Brazil apparently knows very well. It's a way of doing project finance and then securitizing that investment vehicle right after commissioning of the asset, but it had never been used in the solar field before. So they came at us and said, we'd like to use an existing regulation in a new industry, and we think we can probably raise, $30, $40 million around it, but we don't have the capital to work on the idea, and without support, we're just going to go do something else. So we gave them that early stage money, and they went off, and they thought this would have to be a blended structure to work, and it was not. They did a perfectly commercial structure in Brazil after they had gotten some support from us to get it to market. That's an example of, there's a lot of stuff out there that could work if it had a bit of tailwind in the design phase.
That's a good example. Actually, we discussed with them when they were putting together that FIDIC, and you're absolutely right. I mean, at the end, they were able to issue that without any need for concessional finance, which is great because it's a value for money argument at the end of the day for public money that supports those transactions.
Can I mention that our support to them was in the hundreds of thousands of dollars range? We're not talking about millions. We gave them a couple $100,000, and they went off and did a couple of green FIDICs and copycats and ended up with $50 million of transaction.
Yeah, so very good value for money. And it takes time because I remember discussing that project maybe 6-7 years ago. So you do need some sort of support, especially for small structures when they put together those innovative ideas. Debbie, now let's go back to policy and regulation and follow up on Gabriel's last point. Tell us a little bit more about what sorts of, from a policy standpoint, what is it that we can do to enhance the collaboration between, the public and the private and sort of support that conducive regulatory environment, sorry.
Yeah, thanks, Mathieu, and indeed thanks to IDB Invest for organising this event. So I was going to spend a little bit of time talking about the UK's approach to sort of mobilisation for climate investments, and really our role is looking at how we can enhance that collaboration between private and public sectors. Because we know the scale of investment required for climate responses is absolutely enormous, and we also know that public finance alone is simply not going to be enough in this space. So for us in the British government, it's about how do we create the enabling environments to really enable private investment to flow. And of course what that needs, if I can cut to the punchline, is predictable policy frameworks. And of course we need the greening of financial systems, and we spend a lot of time in the UK trying to drive that forward. So to speak a little bit more specifically, if we think about the numbers involved, we know the stock of private institutional capital, about $112 trillion globally. For us, it's about how do we reorient even just a fraction of that funding towards low and middle income countries, as you've talked about, Joan, in terms of blending the finance. So the UK government is pursuing a multi-pronged approach with the private sector. And what we're trying to do is to unlock constraints to private finance through 4 main activities. The first is building a stronger pipeline of bankable projects, especially in kind of low carbon, climate resilient infrastructure. The second area we're focused on is developing innovative new financial vehicles for low and middle income low and middle income countries, and thinking about how we can support them to meet the needs of institutional investors. The third is working with DFIs and MDBs to adopt new business models in order to mobilize that finance. So if you like, working with the public-private interface in terms of the multilateral architecture. And then fourthly, really importantly, promoting the use of climate risk assessments and indeed insurance to think about how we start de-risking investment in climate infrastructure and getting the risk points right. And all of this is about bringing these communities together so that everybody can understand each other's, as I say, risk points, their business models, etc. All of it's just about that collaboration. And as we know, as I said, sort of public finance is just never going to be sufficient to meet the size of the challenge we're facing. So we've got to get to a position where we're thinking, frankly, much harder about where we're putting concessionality internationally and using public finance, frankly, really intelligently to pioneer new instruments, to, if you like, to demonstrate the unproven technologies and sort of prove that they can work at scale. And then, frankly, to do quite a lot of de-risking of particularly novel projects through blended finance, the kind of thing you're talking about, in order that you can generate that pathway and generate that confidence. So as I said, all of this is about how do you make the best use of public finance. If I have time, tell me if I don't. But I was just going to give a couple of examples, because as you know, we've been working with IDB, and you're delivering, of course, the UK Sustainable Infrastructure Programme, UK SIP. We're very proud of that programme, extremely proud of it. And the goal of that has been to accelerate emissions reductions by mobilizing private sector investments in sustainable infrastructure in Latin America. So since 2017, in partnership with IDB, the British government has invested over £80 million through both blended finance investments in infrastructure and indeed technical cooperation to go alongside to support those climate policies and the investable projects. And just to mention very briefly, there's two projects that I'm going to just super quickly touch on that we're really proud of, which I think are great examples of how public and private actors can work together really well, and the role that public finance and technical cooperation can play in de-risking those investments. The first of these in Colombia was where UK SIP supported the government of Colombia to design successful energy auctions in 2021. And that created the opportunity to provide $20 million then of blended finance, $20 million of blended finance to enable a renewable energy facility tender. And that was aimed at creating a market for long-term energy contracts. So very much thinking about the sustainability as we work through that process. And our involvement is very much about de-risking the investment for the commercial actors, crowding in the first movers amongst the local financial institutions, and as I said, setting up the marketplace that could go forward. The second example, also from Colombia, was, again, 20 million of UK SIP blended finance support, and that helped the rollout of Bogotá's electric bus fleet. And that move to clean transport clearly has very high upfront costs. But that investment has been repaid, will be repaid over the coming years in terms of lower operational costs, cleaner air, lower transmissions, etc. So again, really great to see IDB invest, develop that financial package to help Bogotá really move into that space of cleaning the city's air by thinking about how do you manage the upfront barrier in order then to develop the kind of investment pathway. And Latin Finance awarded the deal with Sustainable Infrastructure Financing of the Year award, again, which, you know, we're really proud of, and congratulations to you, Mathieu. I mean, the UK really hopes...
And to BNP, they were part of the transaction
very
as well.
good. Congratulations, BNP. You know, we really hope that the recognition will lead to attracting other cities into that space as well and really moving it forward. So we'll build on the success of that, looking at phase 2 of the programme. We'll stay focused on using public finance to operate, you know, at the edge of that commercial mainstream. And taking a step back, it's all about how we work with MDBs in this just transition process. And the UK, again, we're a shareholder in 7 MDBs, including IDB Invest, and we're really proud of that, and we want to just keep working in this space to make MDB stronger and drive that mobilization of finance for climate at scale. Thanks.
Thank you very much. And this is a very good segue to turn back to you, Laurence. But just before we do that, I just want to pick up on your points, which is like this idea of pioneering, and really want to insist on the importance of that. And maybe Laurence will touch upon that. You know, especially when you're dealing with commercial banking, you know, this is a conservative industry, and you know, when I was working there, you know, new is bad. We don't like new, and I think this ability to test and demonstrate that it works, which might, you know, sound not very innovative, at the end of the day has tremendous value, and perhaps sometimes is a little bit underlooked. But with that, Laurence, let me turn back to you. So we've heard it from the policy side, now from the banking side. So tell us a little bit, what do you do to scale up private investment in climate in developing countries, and where do you feel public money can be used in a good manner? And perhaps also feel free to tell us where you think this has not been tremendously a good use of public money.
Okay, so 2 very important questions. So first, on what we do to scale up investments in climate-related projects, I would start by saying that sustainability is really at the core of the strategy of the bank. It's one of the 3 pillars of our strategic plan, 2025 plan. So it means the whole bank is mobilized to contribute to the achievement of the SDGs and to the Paris Agreement. So one piece of evidence is the commercial business targets we've set on this field, on the energy transition side. We committed to mobilize 200 billion euros by 2025 to support the energy transitions of our clients, so across geographies, and 40 billion in financing low carbon technologies by 2030. So by low carbon technologies, we mean, of course, first and foremost, renewable energies. So in order to do so, we're creating a low carbon transition group, which is a group of 250 bankers, gathering all kinds of expertise, advisory, debt, markets, etc., M&A, to support our clients in any kind of projects, including, of course, in Latin America, where we operate. So I would like to mention 2 transactions we did with IDB Invest, which nicely fit in our strategy. So the first one was the electric buses fleet in Bogota, which is definitely something we couldn't have done on our own because it's a long-term tenor. It was a 15 years loan. So the public-private partnership is critical in this kind of situation. And the other one is a solar PV project in Brazil, which will benefit to business, to an aluminum refinery, and also to more than 600,000 households, provided them with low-carbon electricity. So here again, it was made possible because it was a 20 years PPA. So also with the support of IDB Invest. So going to what could we do better together, which seems like a wish list. So I can
Go ahead. This is a time and moment to come up with wish lists.
So we would love you to expand your AB bond program. To widen the investor base for climate projects. Also maybe to structure lending instruments in the form of SLL or SLB to provide additional incentives for banks and borrowers. You know, we also have the issue with the currency. So if you would be able to provide local currency to banks in the markets where it's needed, for example, in Colombia, because we do, of course, cross-currency swaps, but it's always more convenient when we can operate in the local currency. And you weren't touching upon regulation and all the work you do to prepare the deals, to make them happen, the regulatory side, etc. So we value a lot your support and the fact that you can interact with governments to prepare the environment and the regulation for maybe some more innovative topics. Well, I wouldn't say they're innovative, but at least we don't have a track record as we have on renewables and low carbon mobility. I'm referring to green hydrogen, to CCUS, green fertilizers, green aluminium. I think there is room for improvement, and not improvement, but going forward together on those topics. And of course, as we are, it's a wish list, right? We would appreciate IDB Invest to offer full of partial guarantees, similar to those offered by, for example, IDB. It would help a lot.
Thanks, Laurence. It's great that you mentioned AB bond. I was actually working in BNP Paribas on the first AB bond with IDB, and that's how I got to learn IDB anecdotally. But it's interesting, you know, it took us years to get it together, and now it's considered as sort of a vanilla product. But again, a good illustration of how difficult it is to put something new in place. But once that works, it's actually something extremely efficient. And we've been doing a lot of AB bond in the region, and such a great product. I'm really glad you mentioned it, and I think it's also a good point that you made on the guarantee and the de-risking, which, you know, Gabrielle, you're gonna take it. and you know, there's been a lot of talk about, you know, how could MDBs work better in mobilizing private capital in individual transaction, right? We've been talking about the ecosystem so far. Now let's move into individual transaction. There's a capital increase that is going on with IDB Invest that is sort of centered around this idea of originate to share, very similar to originate to distribute. Tell us a little bit about that.
Thank you, Mathieu. And before I go into this, I can't help but say that we are also very proud. And I don't think we organized this panel to say how good we're working together, but it merits a word about it. I think we all agree on the what, right? The what we need to do. And I think a lot of the difficulties that we have encountered throughout our respective journeys has been on the how. And I think when I listen about the experiences that we're having with SIP or how we're working with BNP Paribas, it makes me very hopeful that we're making significant progress on the how. And I think that's what makes us proud. It has been a much easier road structuring and pursuing these programs now than it used to be 10 or 15 years ago. And I think that's a lesson for all of us, that we really need to focus on. Now, coming to your question, Mathieu, I think a lot of you know that we are engaged on a process to transform IDB Invest, which involves a capital increase. And I think that is pretty much responding from what we've heard from world leaders, especially from the G20. And there's a lot of calls for, based on the G20 CAF report, and I think a lot of us are in some way working with it. We're already doing things to optimize our capital availability and to squeeze our balance sheet so we could do more with what we have. Now, I want to make another comment there when we talk about the G20 and the calls, which is the way we hear it.
Not too many. Our president is on the next panel. We have to finish on time.
Okay. So the way I hear it, and I'll be very quick, it's not that we need more capital or that we need to optimize capital to do more of the same. I think the call is we need more capital to do different, to do better. And I think that's the critical message that I take from that call. And that's what we are trying to do at IDB Invest with our new model, our own efforts to optimize our capital to insurance, to synthetic risk transfers, but also our effort to mobilize. And as an example, in 2016, we had only 2 mobilization products. We have 9 today. 2016, we mobilized 860 million. This year, we're on track to reach the $5 billion mark on mobilization. When we look ahead at 2.0 and the originate to share idea, what we're really hoping for is to be able to, first, more risk-taking so that we can provide comfort, more upstream work that we talked about here today, and serving more not as an investor, but as a catalyzer, as a platform to mobilize more, to bring other investors to invest in our regions and on the projects that we are talking about.
Thanks, Gabriel. You could have gone a little bit longer. Now I feel bad that I cut you. And maybe you want to go with one more point? I think we're still good on time.
Okay. Well, you scared me, so I said, okay. He's throwing rocks. I think when we talking about mobilization, one of the key lessons that we take from our effort and from the success over this past few years, especially as an MDB, is that first, I talked about products. You need to develop products that suit the needs of investors. And you cannot wait for investors to come to us. We need to come to them. And for instance, at IDB Invest, MDBs usually work with dollar loans, right? And many of the institutional investors, those products are not suitable for many of the institutional investors. So what we have done, we have adapted our B loans, which carry preferred creditor status, to a bond format, which in turn is more suitable to private investors. This is just one example, and I think what we look for with our new vision and our new business model is to be able to be even bolder and more innovative on developing products that cater and are suited to a different set of investors. You mentioned that the stock of capital in the private sector, right? Over 100 trillion, right? So we need to be able to offer platforms and comfort and products so that we can direct larger shares of that capital to the projects that we want to work with in terms of development and impact.
Thanks, Gabriel. And that's a very good point, right? Making sure there's different products for different investors. Sometimes, especially in the public sector, we have this habit of referring to the private sector. It was like a lone individual sometime with all that money, whereas in reality, it's a lot of many different private investors, with different risk appetites, different ways of working, and it's very important to recognize that. Joan, this shouldn't be just about the MDBs, because it's not all about the MDBs. So tell us about a structures that you've seen, or models that you've seen that have been successful in mobilizing private capital where no MDB was involved at any point in time in the process.
That's a tough one, because in our blended finance statistics, MDBs feature very largely. And I did not bring an example to this conversation, so I'm not sure I'm going to come up with one immediately. But what we are seeing is a new sliver of pattern developing, where you have philanthropic capital working directly with private sector capital and moving more quickly than they would with an MDB. So I'm sorry I don't have one to sort of show you right here, but it's just generally philanthropic capital is a very, very small part of the blended finance universe. But we are seeing new interest or stronger interest in just going ahead with companies. And you'll see that where it's corporates working with donors. So, imagine companies in the textiles business working backward through their supply chain to figure out what they can do differently. That takes some grant resources as well as some corporate resources to do that sort of thing. So there's a lot going on that's quite interesting outside the MDB universe. I will go back to the MDB universe just a moment to put a plug in for IDB Invest. I think that'll be appropriate in this house. I hear somewhat frequently out there, because we talk to all sorts of private sector entities. A lot of them are members of ours. We talk to donor agencies. And I don't mean to argue against a capital increase for you, but I think being capital constrained has meant that there is a culture at IDB Invest of designing transactions with private sector participation in mind. And I want to commend you for that because it stands out a bit. Whether it's blended or whether they're straight up deals, we see a faster process and a more constructive early stage conversation happening in your transactions, I think, than we often see across the board. So I wanted to go back and put a plug in there since I figured I'm in your house, why not? But we hear that from third parties quite frequently, the speed and the understanding that the private sector vastly outscales your resources, so you might as well design yourself to accommodate it.
Thanks, John. And by the way, the example you gave us on the green FDIC is one where no MDB was involved in the process. So you did answer the question already. Debbie, let's stick on the specifics and on the example. The UK government has something called Mobilist, which as an ex-debt capital market person, I found fascinating, and I really like the point, without explaining it because you're going to do that, but that it is explicitly targeting listed issuances. So, tell us a little bit more about this model and why does it matter from a private sector mobilization standpoint?
Yeah, thanks. So, we're really proud of Mobilist, if I'm allowed to say that. And the reason why is because if we're thinking about scale, we need to think about public markets. Because we've already said institutional investors hold the majority of global wealth and primarily invest that through listed equities and debt. But the majority of their investments is, of course, into developed markets. And we know that IDB is interested in the role that public markets can also play in that capital mobilization. So to dive straight into the example, IDB and Mobilist have worked together on an event at the embassy of in Mexico in March, and at the same time we were having conversations. IDB was together with the London Stock Exchange Group in London, reaching out to a much more diverse set of investors than the usual, frankly, development finance audience. So, the idea is, can we use all of these conversations to really throw up new opportunities and new perspectives? Because today our Mobilist program is collaborating with MDB Invest and thinking through a set of warehousing structures similar but not quite identical to the Bayfront infrastructure-backed asset securitization that Mobilist supported on the Singapore exchange in September. Because Mobilist, and the reason why we're really proud of it, has been set up to support new, scalable, listed investment structures with assets in developing countries that are attractive to institutional investors. So exactly the sort of thing you were talking about, Gabrielle. How do you package things in a way that institutional investors are comfortable with and can understand and can engage with in order to mobilize these much deeper pools of capital and bring them to the service of the sorts of endeavors that we're all faced with? And the neat thing about it for me is public markets have got unique characteristics that help to tackle one of the single, I think, biggest barriers to investment in developing countries. I don't know if you're going to agree with me, but one of the key challenges is around a lack of data in developing countries, which then affects the investor's ability to accurately price the risk. So the neat thing about the listed products is that they generate a large amount of information daily, every day, on the risks and on the return in those developing countries. So what you're actually doing is creating that data stream that can help, if you like, build confidence, because there's a sort of data trail, but also it can help correct sometimes the misperceptions of investors about that market and the risk structures, etc., especially when you're trying to do things we've been talking about, which is how do you get those new products? How do you get confidence to go into new markets and to move these things forward? So for me, it's that sort of almost that demonstration effect that Mobilist seeks to achieve through its equity investments that's important. And then the characterization of, one of the characteristics of public markets around transparency and standardization hopefully allow for these successful products to then be replicated, and you can then try and shift to mobilization at scale. So it's very much about how do we make markets, how do we, again, create that pathway where commercial actors and institutional investors can get more comfortable both with the countries in which they're investing and the types of products. So I feel kind of really aligned with other colleagues on the panel in that collective ambition to mobilize capital at scale. And for me, public markets are one of several really important opportunities to do that.
Thanks, Debbie. And since we are at time, I'm gonna turn to Laurence and John. Any reaction on the data point? Which I think it's a very good one, and I suspect you have a lot to say about that.
Of course, I totally concur. I think while the data issue is the elephant in the room in everything we do in sustainability, we're definitely lacking data to have a robust framework and have a precise idea of the risk we're taking. So everything which contributes solving the issue is very positive, and it will be based on the past transactions. So the more we do, the better we will be able to do more in the future.
Yeah, I have a huge reaction on that one. We get hit by both sides. Remember, if we're guiding the field of blended finance, we're talking to donors and we're talking to the hard capital providers like BNP Paribas. And on both sides, they're saying, we don't have enough evidence about how to do blended finance deals. Forget what the market risk is. We don't even know how to structure these transactions to work together. You have donor agencies saying we don't know if 20% is how much money we need to put into this deal, or whether 10% would do it. We don't know whether being subordinate in all cases is needed, or whether we just have to cover risk number 2 but not 1 and 3. On the private sector side, they're saying we don't know how the last 16 deals in this market turned out because nobody is sharing data with us. So we don't know whether we need this much capital from a concessional source or twice that much capital. So everybody is suffering from a lack of data, and the real people who are suffering are the people in that country who are dealing with overpriced capital and insufficient capital because there's not enough data around how to put these deals together. It's a huge issue, and anybody issuing soft money into a deal, they're not hunting for a return, right? They're hunting for impact. So when they put their money into a deal, they should be demanding that some data of some sort on the pricing, on the outcomes, gets issued to the public. Because without that, the people in Brazil or in Paraguay are suffering from overpriced capital and underwhelming volume of investment. So data is enormous from our point of view.
Thanks, John. And we're going to wrap it there, but if I can sum it up in couple of words: regulatory environment, bankability, upstream work, developing product solution for the different types of investors with an emphasis on local currency, and data transparency. And hopefully that should help us going to the next while. Well, thanks a lot for joining us today. Really appreciate the time. Again, so we had Gabriela Acevedo, our Chief Strategy Officer, John Larea, CEO of Convergence Blended Finance, Laurence Pessez, Chief Sustainability Officer at BNP Paribas, and Debbie Palmer, this time I remember, Director of Energy and Climate at FCDO in the UK government. Thank you very much, everyone.